The housing market has become a brand new thing. It's become a no man's land.
Prices aren't going up anymore.
No, they're not.
But they're not going down either.
No, they're not.
They're simply not being sold.
All right, Jack, the biggest checks in our economy. The biggest checks in our economy. Where do those checks get cashed?
PGA Tour.
Yeah, that's a good point. Those are physically big checks.
No, it's the real estate markets, Yetis.
Yeah, the real estate market. And no market has seesawed more in the last year than like the entire housing market.
For the first 2 years of the pandemic, it was a seller's market,
Yeah,
baby.
5-bed, 4-bath, live-in closet with a price tag if you can't afford it.
Work from home, it changed everything. And people were scrambling to stick their family flag onto a plot of land somewhere.
And then even in New York City, real estate had a record year of record prices. Condos were priced like kingdoms.
But then, for a brief moment, earlier this year, it became a buyer's market.
Yeah, there were recession worries. People were scared, so they weren't splurging on that condo.
Home prices dipped.
Actually, they did.
Sellers were selling seaside suites for less than they wanted to.
But then all of that changed just this week.
Spiking interest rates have dramatically changed the real estate market.
Yeah, so it's not a seller's market right now, but it's not a buyer's market right now.
We're looking at a no man's land.
Get this, Yetis. The 30-year standard mortgage rate just hit 6.75%.
That is more than double where it was 1 year ago.
So to borrow money from a bank to buy that modern farmhouse, it's the most expensive it's been to do that in decades.
Because of the spiking interest rates, the average home payment in America costs $900 more this year than last year.
So we've got this funny situation. On the one hand, the buyers won't buy.
Because it's too expensive to borrow at such high interest rates.
But then on the other hand, the sellers won't sell.
Because they'd have to replace the low interest mortgage they have today with a brand new high interest mortgage.
So Jack and I are looking at this situation today and we're like, wait a second, it's not a seller's market, but it's not a buyer's market, man. What is it? What is this? Something in between.
It's becoming a no man's land.
No one's there. No one's buying. No one's selling.
There's no buying. There's no selling. It's a no man's land real estate market.
Nothing in the middle. So Jack, what's the takeaway for our buddies who may be buying a house?
Your parents will say they saw the same housing market in the 80s, but that's wrong.
Yetis, we've had higher interest rates before. That's true. And we had them 40 years ago in the 80s when boomers were like in their 30s.
1982. The typical mortgage rate that year was an insane 16%, which is more than double today's mortgage rate.
Okay, but here is the key difference between today's housing market and the 1980s housing market.
Homes back then in the 80s were way more affordable than they are today.
For example, back in 1982, the average home price was only $66,000. Jack, what does that translate to today?
In today's dollars, that's $207,000. That was the price of the average home in 1982.
But today, the average home price is $440,000 in today's dollars.
So a home today is twice as expensive as it was in 1982.
So it's the combo of high interest rates and higher house prices that make today's market unique.
That's why our housing market today isn't the same as it was in the 80s.
Our housing market is becoming a no man's land.
Thanks for T-Boying with us. Don't forget to like and subscribe to this channel for Pop Biz every day.